Hey friends, Lucian here with the Bullish Bears team, making the watch list video for Monday, October 16th. And now these watch list videos, if you've been watching the past couple days or few days or so, is now we're now adding on swing trades as well. So these videos are going to be a little bit longer, but we're going to have day trades and swing trades on there. The alerts are now going to be for day trades and swing trades. If you haven't watched our alert video update yet, we posted one a couple days ago on our swing trade recaps from last week, and they were awesome. They were anywhere from 50 cents to pretty much $1.75 gains. With the exception of Friday, and that's something I wanted to talk to you guys about. I didn't really mention in our last in the swing trade video, but on taking swing trades, again, it's a matter of your preference, but it's kind of taking a position. Like when I do a watch list video on Thursday night for Friday's plays, day trades are okay, but swing trades, it's a little bit risky to get into a swing trade right before the weekend because anything can happen on Monday. So it's usually like Monday, Tuesday, Wednesday, maybe even potentially into Thursday, taking swing trades, but you want to be very careful into going on the weekends. It's a little bit risky. That's where, again, day trading, it's fine. Obviously, you still want to be careful of what's happening within the market, but you're obviously day trading, right? But swing trading, you just want to be careful getting into a position for the weekend because anything can happen on Monday. So I just want to give that caveat, or put that caveat, or whatever you want to call it out there, disclaimer. But when we're doing these watch list videos and when I mark out these areas, I actually did pretty much the watch list ahead of time for the day trading and the swing trading one. It's Saturday, so I had a little bit of time to do it ahead of time. So I'm going to get right into it when I do. But what I really want to stress to you guys as you're learning here is you basically, when an area that is resistance, right? When I mark up an area of resistance, like say this one right here, right on CDTI, you'll see some resistance here. If price goes and breaks that area of resistance now becomes a critical area of support. So once price breaks above a critical area of resistance, that resistance area becomes support. So what does that mean exactly? Well, if you get into a position when it breaks above a resistance level, if price falls below that, which that resistance level becomes now support. If price falls below that, that's a huge warning sign to get out. Sometimes there's fake outs. Obviously, you got to watch the charts. But if you're looking for a breakout and then it breaks below that level, that's a huge warning sign to potentially get out. So all these areas that you see of support or of resistance that I'm showing on my watch list every day, if you get into a position and it breaks below that, that's a huge warning sign. Again, get out. So that's kind of like your first, I don't want to say your first line of defense, but a major line of defense on putting, with a stop loss. Now let's get into stop loss. Stop losses again really quickly. I am a huge fan, and many traders are a huge fan of manual stop losses where you click the trigger yourself rather than having it inputted into the system already. There's lots of theories out there, but saying, oh, market makers don't see your stop losses. I'm under the impression, and many of the other traders are under the impression, that market makers can see your stop losses and many times will trigger your stop losses on purpose. So if you're just getting started and you're new, again, I would highly suggest just paper trading for months on end and practicing with using manual stop losses, like meaning you press the sell button yourself. If you're not comfortable with that, or if you're, like working and you don't have a chance to look at the screen, you can practice with stop losses by putting them into the system. But just be careful. Just know that it's many times, I can't prove it, but it's kind of a known thing that market makers will many times trigger your stop losses. And then that's why you'll see a lot of times price will just smack down below a certain level and then pop right back up. That's just basically taking everybody's stops out many times and then going back up. So price will do that a lot. So again, if you're doing day trading, so you're going to be day trading in front of your computer, it's the best thing you could do is train yourself to put in a manual stop loss where you're pushing the sell button, not letting the system do it. And again, if you're not comfortable doing that, then you shouldn't be trading with real money anyways. If you're not comfortable getting in and out of trades and pressing the buy button, pressing the sell button, that means you shouldn't be trading with real money, and you should be practicing with virtual money, making hundreds of practice trades over the course of months, if not a year plus, until you get very comfortable. That's just the best way to become a really good trader. So I say that again with day trades, that either whether you're doing day trading or swing trading, when a critical area of resistance breaks, it now becomes an area of support, right? When a critical area of support breaks, again, that area now becomes resistance again. So if price goes and breaks above this level, this is now support. If it breaks below this level again, this area then becomes resistance. So it's always a battle between support and resistance, and the bulls and the bears. Excuse me. Before I get into the watch list video again, I just want to reiterate, we've been getting a ton of requests for personal coaching. If you need extra coaching on how to trade and really get better with learning all of this and how to implement these strategies, we do have a coaching tab over here on our website. Click on here. Tim and Dan are great coaches. I personally am more of one that likes to do more like group stuff, video stuff like that. Tim and Dan are really good with one-on-one coaching and stuff like that. So again, everything that we're offering right now, we are not membership based. We're giving all this stuff for free to you guys. The only thing we do charge for is obviously personal coaching, because that takes up our personal time. If you need coaching, feel free to reach out. Click on our the coaching link. Let us know what you're looking for. And our rates are extremely reasonable. For the level of coaching that Tim and Dan provide, what we charge is super inexpensive compared to everyone else in the industry. Again, we're not really, do we want money? Of course we do, but we most importantly want to help you guys to become better traders, because our biggest goal is to build a big community. We want a great community of traders that literally we do this for decades. We're all friends. We become close. We become good traders. We have this community, a place for people to resort back to, because this industry could be very lonely, very dark, very harsh a lot, and it's nice to have people to talk to, become close with. Again, we're all in competition with each other. That's the stock market, but if we could all have the community and learn from each other and make it more of an interactive and close kind of community, that's ideally what we're looking to do. So it's going to take us a while to build this movement. Obviously, we're growing like crazy, but until we can get big enough over the years and get a massive following where we can kind of partner with some companies to bring in that that income for us, where we don't have to charge memberships. Again, we do survive on donations to keep things running. So my point being in all this, we're giving you all this for free: the watch list, the videos, the alerts, everything. The only thing we do charge for is personal coaching. That is extremely reasonable. So if you need extra coaching, again, we're getting lots of requests. Dan's doing a lot of one-on-ones right now. Eventually we might do some group coaching as well, maybe offer some discounts there. But Dan's coaching, he's really giving you guys the awesome strategies that you're not going to really find in these courses that many of the leaders and companies are offering. And if you really think about it, and it's nothing wrong with it, it's part of the industry. That's what business is, right? These companies and membership-based companies, they want you around long term. So if a company wants you around long term, they don't necessarily want to give you all of the exact strategies on how to become a really good day trader, unless you're paying thousands of dollars for mastermind secrets or the private secrets and the exclusive stuff. That's where you got to pay thousands of dollars, sometimes tens of thousands of dollars. Again, there's nothing wrong with it. They want you around paying, for the courses. They want you around paying that $150 a month or $200 or $300 a month because they want you hooked on their services so they can keep you long term. That's business. That's just how it works. we're trying to do a different model where we're not doing that, and basically we want to help you to become good traders, and we're looking to build the community on the back end because we want the friendships, we want the interactions, we want to have this where we're around long term together. So you know, in all that, again, what we're trying to ideally do is really help you and empower you to become good traders. So I just rambled there for a moment. So let me go back to the watch list. But again, if you need help, just go over to coaching over here and check out our website. We got a lot of stuff going on over there. So again, going back in all these watch list videos are going to be longer, but I'm going to try and jam pack them with lots of content and really drill it in your head of support, resistance, patterns, support, resistance, patterns, support, resistance, patterns. It's very, very important. You know, candlesticks. So again, it's support, resistance, candlesticks. Candlesticks tell a story between the bulls and the bears. That story then forms patterns. That's another thing that traders look at, the patterns of breakouts and breakdowns. Moving average lines shows areas of support and resistance. Then looking at level 2 and time and sales, another story showing you what the buyers and sellers are doing. So it's a huge big picture of pretty much, you know, of trading, really, you know, and it doesn't really matter whether you're a swing trader or a day trader or a long-term trader. Everybody's looking at charts, support, resistance, patterns, and then, you know, everybody's got to, you know, to enter into a position, even if you're a long-term trader, you got to come on to the intraday charts and find your position, you know, your entry. And everybody wants a better entry, right? You want to buy low and ideally sell high. So traders are all looking at these patterns on the daily, then they're looking them on the patterns intraday, and then they decide whether they're going to get in or out of the trade. So again, I want to just kind of anytime I try to mix up the videos and stuff like that, not try to make them boring. I don't want to just be like, hey, here's alert, here's a trade, that's it. I want to kind of give you some lessons and training within them. And that's why it's important to really reference and watch these watch list videos daily, because you're going to see all these areas of support and resistance. You're going to see why I put the alerts there. And then you can just go back and rewatch the videos and do recaps each week and just see, hey, how did these trades work out? You can paper trade them and see for yourself how they work out. So all that to say, let's get started on the watch list. Again, I pretty much did the watch list, so now I'm just going to show you what's on there. CDTI, there is some good overhead resistance. So obviously, you really want to get in, you know, so this one went up to 225 and pull back on Friday. So first of all, you want to see it break 225 before you get in. But then there's some overhead resistance right at that 235 or 36 marker, and then basically 250 at the 200 SMA. So this guy has got some good overhead resistance. If you do get in above 236, be careful of 250. If you want to risk and get in above 225 if it breaks, just realize there's overhead resistance at 235 and 250. If it can break that 250, that could be really nice. But, you know, this is one I don't love because of the overhead resistance. But if it breaks out above 250, it could be a good one to watch. SECO. It's a little bit different of one. This has been kind of bear flagging. And you'll see prices right below the 9 EMA. You know, so you can see it kind of fell down, formed this kind of this inverse hammer, kind of price went up, broke a little bit above this red candlestick. Now you want to see it break this 820, this 822 area. If it breaks above 822, it could have a little bit of run up to 880s, this 20 SMA. You got to watch it. It's bear flagging. Again, this is one I don't love. It's one I just want to just keep an eye on. Again, potential scalp, you know, using, again, if this area breaks above here, this 822 area, now you got to be careful in between these moving average lines. That's where support and resistance becomes very important. So if you were to get in a trade like this, if it breaks below this 820 2 marker here, I'd be very careful and get out. You know, even this marker, that 806, the top of this red candle, psychological support and resistance area, whole and half dollar amounts. Again, I don't love this one, but there could be some room on this potential reversal. But be very careful. If it falls, this can give back a lot. CLNT. Another one I don't really love. You'll see all these candles and wicks. It gets very crazy. But I put it at or above $6. I'd also be careful of this 610 marker. Maybe I will put it at, I'm going to put it on, I'm going to remove this one here. I'm going to put it at or above 610 just because I like being careful at these wicks. Sometimes, like, I'd rather have you get a late entry, but be careful rather than get smacked around. That 6 to 610 could be, you know, a volatile area. Another thing you want to be very watchful of, right? With level 2, when price goes to break over this, you know, let's say a critical resistance area, right? You want to ideally get in when the bid moves up to that level and time and sales are showing orders. So if you see price broaching, I don't want to do it on the, I don't like this stock per se. Let me find a different one. ONCS. Another one, I don't really love this, but I want to see it get above this kind of area here, this 141 for breakout. Again, I don't really love this chart. It's kind of messy. There's some, not the greatest of plays. Friday's watches, I don't think it was the greatest either. But again, this is all part of day trading. Again, I'll get to the bid part in a second. I want to see a better one. This one's just kind of messy and choppy, but you know, if it gets above this level here, this 140 area, be careful at 150s. If it goes up there, you know, it could potentially run. CYCC, again, not another one of the greatest. If it breaks above 213, it could run, but then be careful of 229. Again, not loving these. That's why it's super important to have a scanner, a live scanner. Trade Ideas is our favorite. We have a promo code in the bottom of this video. For specific reasons like this, the watch list at night is the market's not going to always go up. There's going to be pullbacks, and when there's pullbacks, there's not going to be as many plays. So when that happens, it's super important to have a live scanner to really find additional plays. So I put some of these extra ones on here sometimes so you have more to look at. But some of them, you know, again, they're just not really good to look at. But let's take, for instance, this one right here, okay? This one had a huge drop, JILL. Then you see this potential reversal candlestick, this potential hammer, potentially hammering out a base. Now, you want to see there's a huge gap down, right? Huge gap that can be filled. So my point being, going back to level 2, you'll see the top of this candlestick, 530, is basically the base of the start of this gap, which goes all the way up to really here, right? You also want to be careful at the EMAs at this 842 marker. So there's lots of room up. Kind of formed this base here at that 482. So when price goes, if it breaks above the top of this candle wick at 531, you want to see the bidders coming in, this bid marker getting to that 531, and then you want to see it moving up, 531, 532, and you want to see orders coming in, 531, 532, 533, for it to hold. Now, a lot of times what you'll see is the bid might shoot up to 531 really quick and then smack back down to 526 or 27, and you get stopped out. You want to see that bid hold. Ideally, you want to have a tight bid-ask spread. You know, I like 2-3 cents or less, 1-2-3 cents. Anything really above that, you got to be careful. Now, the low floaters will have bigger spreads, and that's where you got to. Sometimes you just got to take that risk when it's breaking a pattern. You'll get in, and if the bidders don't come in, you're gonna have to get out really quickly because sometimes it'll fake you out and then it'll turn. But you ideally want when price is going to break a certain level, let's say this 531, you want price to get up to 531. You want the bidders to come in at 531. You want to see the bidders stacking over here where there's more buyers than sellers. And then you want to see orders coming in at this, you know, at the 531 marker, and then ideally start seeing the bid move up and the orders start moving up on time and sales. If it doesn't do that, that's a huge warning sign and a potential trigger to get out. That's why I like to see some candlestick closes above here, like a 1 minute or a 2 minute. Sometimes you might miss the entry and you'll get a big candlestick up, right? And it'll break over 531. You'll be like, oh, shoot, I missed my entry. Not necessarily, because what will happen is sometimes you get a big candlestick up and then price naturally wants to pull back to resistance becomes support now. So if it holds, if you get a big candlestick break, price, you know, you didn't necessarily miss the entry. It could be turning into a bull flag where the big candle will go up and then it's going to start to pull back. At that point, if it touches back down that resistance area, which is now support, and then turns, that's a bull flag, and that might be your entry. So sometimes you just want to let these candles form. You might miss it. That's where your whole, what risk are you willing to take? Are you willing to get in before the breakout to try to get a better position? Are you willing to wait for the bidders to come in, let a slow mover happen, get in when it starts to close? Maybe you get lucky, you get, you know, like the price will slowly move. You'll get a 1 or 2 candlesticks that'll stay above here before it runs and you get in there. Or sometimes you're just going to miss it. It'll go parabolic and then you just got to walk away and just say, hey, you know, no big deal. I missed it. It's just a matter of all of what type your trader is. There isn't really necessarily a right way or a wrong way, but ideally, like I said, when price breaks a certain level, you want to see price get to the 531. You want to see the bidders come in at 531. You want to see more bidders than sellers at the 531, and then you want to see time and sales showing good size orders coming in, and ideally, you want to see that bid start to move up. If that thing doesn't happen, again, there's going to be many fake outs. You're going to get in and think it's going to work, and then it's going to collapse. But just know, once an area of resistance breaks, now that area is support. And many, many, many times when resistance is broken, price comes back down, wants to retest that area. If it breaks that area and falls below, many times that's a showing of failure, a sign of weakness, and to get out. And also many times it's a fake out. That's why you go to look at it with the 1 and the 5 minute chart, see what happens. Sometimes you'll get a breakout and then you'll get a 1 minute close that might close at 529 just to shake you out, and then it shoots up. Again, all a matter of what your risk tolerance is. If you want to have like a really tight stop, you would use previous resistance, which is now support, as your target area. But so again, not to ramble, I just really want to stress support, resistance. I want to teach you guys in these videos of what to look for. But when, you know, just again, really stressing, when it breaks a certain level, you want price to get to that level. So when you see this marker, right, for instance, with this 531, you want to see this right up here, or wherever your brokerage is. You want to see price going to 531. You want to see the bid at 531. Ideally, you would like a tight bid-ask spread. And sometimes what I usually do, I like to put like a 5-cent buffer. So if I want to see it break 531, I might have my limit order ready at 536 to give it a little bit of a buffer, right? And if the bidders start coming in at 531, 532, and the ask might be at 534 or 35, at that point I might buy at the ask, risking this breakout area as support to get out. I might be willing to buy at the ask when the bid goes there if it's a tight bid-ask spread, because chances are it might start to hold because the buyers are coming in. But if it breaks below that, you know, if I got in at a 535 entry and then it's a 1 or 2 minute candles that reverses and falls below to 529, I had a tight stop, right? So that's a 5 or 6 cents loss. That's a good risk management. Whereas something like, let's say if it breaks 533 and you're risking the bottom of this candle, that's a 50-cent stop. If you had 1,000 shares, it's a $500 loss. You got to determine what your risk management is. Ideally, you want to have ideally at least a 1 to 2 profit loss area. So if you're risking 10 cents, you want to make 20. If you're risking 20 cents, you want to make 40. You don't want to risk, you know, 50 cents to potentially make 10 or 20, right? So again, just this video, I'm going to kind of try and stress more of what you're looking for. I try to add some of that stuff in as we go along. ZFGN, another one, right? Again, don't necessarily love this one as well, but what you're looking to do is get in at a, if you're going to get in on Monday, you want to see it break 425. Be careful of 450 and then $5, obviously, psychological support and resistance areas. You can see there's a gap up here. Doesn't mean it's going to fill, but the closer you can get in over a whole or a $half amount, the better. But if you got in on this 425, be very careful at 550. Watch candlesticks, watch level 2 time and sales, and then see if price breaks. If price breaks 450, you want to see it hold. You want to see it hold. You want to see the bid. So, for instance, if you were to get in on this one on Monday, you'd want price to get up to 425. You'd want to see bidders coming in at 425. You'd like to see, ideally, more bidders than sellers. Ideally, a tight bid-ask spread. This is a terrible one. It's obviously after market, but you like ideally a tight bid-ask spread. If it's not and it's a low floater, that's okay sometimes as long as it's going in your direction. Obviously, the momentum, it can change. And then you want to see time and sales showing tape of sales coming in at that 425 marker. You want to see the bid going up to that. Sales or orders coming in at 425 or above. And then what you're going to want to watch on level 2 is, what's happening. Are sellers stacking up at 450? Watch what happens. And, when 450 approaches, if you see more sellers than buyers, then you want to see the bid going in and cutting into that. And obviously, ideally, the bid going up to break 450. If not, if it's pushing down and you see the candlesticks forming, that might be a potential area to sell. That's what it's really all about. It's looking at this entire process, seeing it. And if you're saying to yourself, man, I'm so confused, what do I do right now? That's a lot of information. Well, it's a lot of information because trading is hard. 90% fail at trading. I'm not trying to be doom and gloom. That's just a fact. And most, again, trading companies and leaders, they're not doing anything wrong. They're a business. They want your money, and they want your money long term. There's nothing wrong with that. That's the way the world goes around. But, a lot of them aren't going to necessarily tell you all of the exact what you need to do, how to do it, because they want you part of their system. You don't need, if you're a new person, to be paying $150 a month or $300 a month to a trade room for alerts. What you need to do is learn how to become a trader yourself, get your own scanner, and trade yourself. You don't need, when you become a good trader, you don't need to be paying other companies for trades. That will just hurt you. That's why we were trying to do something different in building the community. Because you know what? You could be a multimillionaire, you could be a super rich trader, but great. At the end of the day, you have money, right? It's nice at the end of the day to give back, to talk to people. People like to be social. They like community, right? That's why people go to, church organizations or political affiliations or clubs or stuff like that. We're built to communicate. And that's why we have the community. So that for specific, for this industry, like it's very kind of lonely and dark, and it's just kind of, it's a heavy type of industry. It's nice to have people to talk to. So, that's where we want to have that and provide that support and have that for you guys, so that as we can teach you, obviously, if we teach you what we're learning, what we know, then obviously you can be as good as traders as us or better, whatever, become one of the best traders in the world. But at the end of the day, if you can still have a community to come back to and people to talk to, it's just, that's a nice thing to have. And that's what people want. They want community, right? So my point being in all this, again, if you're confused by all of this, reach out. Tim and Dan, again, good coaching. We're very reasonable with our rates. We're all about trying to help you, not take your money. But if you'd like to donate to us, we do appreciate the money because it just helps us to continue to grow. Again, no promises down the road. We may become membership based. Ideally, we don't want to, but that's where your support comes in to help us keep growing. So DEPO, again, that one, I don't really love this. Potentially a hammer forming here. Some volume came in. So this one, you can't really see it, but 515. So really at above 517 level. Top of this candle, 550. Potential reversal. Might be a scalp. It's a slow mover. But, so point being on this one, again, if the market opens, you want to see it, the buyers come in. You want to see price move up to the 517 level. You want to see the bidders move up to 517. Ideally, see more bidders than sellers. And then you want to see orders coming in at 517, 518, 519. Then you get your potential position. Then you look at these areas of resistance. Look at time and sales. Our level 2, see if there's any seller stacking. Many times on level 2, they're fake outs. Some people will put fake orders there just to shake you out of your position. Then all of a sudden the bid will go and break, and then obviously it was a false flag. That's where you got to look at all this. Look at candlesticks, look at moving averages, and practice. Again, can't stress this enough. If you're confused and you're like, I don't know what I'm doing, well, first of all, you shouldn't be trading with real money until you get this down and you have proven consistent, tracked results of trading on a consistent monthly, weekly basis of getting consistent gains where you're confident. Don't ever trade with real money until you are really great with your paper trading account. I don't care what people say. Yeah, people will say, well, it's not the same emotions trading with a virtual account as you would with real money. And that, I would say, is kind of BS. Well, first of all, it's true. But second of all, it's BS in the sense that means you have not invested into your virtual account like you would a real account. You need to take your virtual account and treat it like a real account. Trade it with the exact money positions that you would use with real money. Don't buy more shares than you would buy with real money. You're just going to hurt yourself. And then you want to track all of your trades. So when you invest into your virtual account, this has to be like your real account. You need to feel the emotions of what it's like to gain, what it's like to lose. You need to set your risk management exactly like you would with a real account. You have to trade with the same exact shares that you would a real account. If you don't invest heavily into your virtual account, you will never become a successful real trader with money. You don't ever want to even attempt real money until you have treated that virtual account like it's your real account and you have tracked it and had consistent proven results. And then the moment you start to go into real money, you want to start trading with a smaller positions first. So if you normally would trade with 1,000 shares, start off with 500. Get consistent for a couple weeks or so, then move to 250 shares, then move to 500, then move to 1,000. Consistently tracking your trades. Trading is a long-term game, and again, I'm telling you guys, I don't mean to sound doom and gloom. It's just a fact. 90% of traders fail. There's no way to beat the statistics, and also the best traders in the world still fail 35 to 40% of the time. It's just the way it is. The best traders in the world will still make losing trades 35 to 40% of the time. That's it. That's why, again, most people, 90% fail, is they can't accept the failure in trading. It's just failure is part of the game. That's why risk management is so important. That's why learning all of these strategies are so important, and you need to make the decisions yourself when trading, and that's why we're trying to empower you to become good traders. We're trying to give you the support, help you to become a good trader, and then give you the community on the back end for support to really, grow as a trader, have fun, make it, trying to trade and change the perception of the game and everything. But again, guys, there's no way around. There's no easy way to become a good trader. It's all it's all about hard work over months and years until you either can stick it out and make it, or you fail like the 90%. Again, not to sound doom and gloom, just want to tell you the reality of how things work. TNDM, don't love this one in the sense of, again, so now you see support at 286. Again, I just put this one on just because, again, Friday was kind of a weird day. The moving average, this is all looks like garbage. But if buyers come in, come in on Monday, if the market goes back, again, it's not as funky and it breaks this 340, 350 level, you could have a move up to 4 to 450. Could be a decent reversal. As of right now, it's not looking good. So obviously, that's why I put the alert above 350. If price doesn't come up to above 350, then you're not going to get in. So again, reiterating the strategies. You want to see if you're going to take this bullish. Now, if you're going to go bearish on it, then if this falls below 286, then you can take this potentially short using 286 as your stop. So it's just the reverse, right? If price falls below a certain level, you might take it short. And then if it reverses and it closes above that level, you cover, right? So shorting is just doing the opposite of longing. When you long on something, you want to see the bidders coming in at 350. You want to see the price at 350. You want to see it close above that area. You want to see, again, the bid up at 350, more buyers and sellers. You want to see sales coming in at 350, 351, 352. You're going to look at these resistance areas. If price reverses and falls below that 350 level and starts closing, then you're going to have to determine, is that a fake out, or is there weakness and you're going to get out? That's where, again, looking at EMAs and candlesticks on the 1 and the 5 minute are going to really help you to determine that. That's why, again, if you need coaching, reach out to Tim or Dan to really learn this. So again, my point being in all this, don't love this, but that's what I'm looking for. So that is the daily watch list. I'm not thrilled with this one, but again, guys, that's why Trade Ideas is super important to have. It's the best scanner in the industry. If you're new, if you don't have money, if you're on a budget, don't buy it. Don't waste money until you're going to get ready, until you're ready and you're serious to become a good trader. Like with anything. In life, in business, in anything that you do, you need tools to help you with your success. Everything doesn't come free and everything doesn't come easy. That's why it's important to have these tools. So again, when you look at this watch list here, it's not the greatest. But you're not going to have an awesome watch list every single day. That's where also shorting comes in, because some of these might be a good short. So come Monday, this one might be a decent short. Who the heck knows? That's why you choose how you are as a trader, then learn how to trade both ways, and just see how the patterns and how things are forming. But that's where, again, like I said, Trade Ideas, having a live scanner will help you, because Monday morning, the market might tank where all these might be garbage and everything's bearish. So these might be all horrible and there might be lots of good bearish plays. Or maybe it'll turn. There's a couple that are really good on the pre-market watch list, but you won't know unless you have Trade Ideas. But we do post the pre-market watch list. So it is, you're able to see what's on the watch list there. We post it every morning, but a lot of times some of the stuff that's on there isn't the best movers. It's ones that open when the market opens. That's why having a live scanner is important. So let's get into the swing trade watch list now. I already did that one ahead of time. Make sure you're going back. I want to challenge you guys. Take these watch lists that I do every day. Watch the watch list videos. Look at the support and resistance. Paper trade them and watch what happens with the results of these trades. These swing trades, literally, I think it was the first 3 days of all last week. They all seem to work until Friday. And again, it would make sense why Friday doesn't work. People aren't buying a lot of options or swing trading going into the weekend. They don't like to hold their positions. This one had some really good ones on it. And I'm just kind of going to go right through them here. You'll see here NSM. You'll see the yearly high on the daily right at 1983. I just put an alert at 1984. If it breaks 1983 or 80, obviously if it breaks 1983 and you get a position, you are going to get out. If it breaks 1983, or again, see if it's a fake out, but this is a nice breakout if it does do that. And you'll see on the weekly, this is forming this really nice higher lows, or the top. It's like this nice ascending triangle kind of wedge. You'll see if this breaks out here, lots of tests at this area. If it breaks out, it can go up to that, that $21 area right around the 200 SMA. That's potential nice breakout coming. It could be, you'll see, again, a dollar move. You could be like, big deal. That's not really a big deal. It's only a dollar move. Well, if you bought 1,000 shares, that's $1,000. If you bought 10 options contracts, You know, I'm not sure what the options contracts are on this, but if you spent whatever, 10 and they were 100 or 150 bucks each, and you put, 1,500 into it, and it moves up $1, it's $1,500 or $1,000. So again, whether you want to trade options or shares, it's all the same thing. This area is resistance. If it breaks, it then becomes support. So if price breaks above its support, you potentially get out, especially with options or something like that. Well, you got to be careful with applied volatility and all that kind of stuff that goes into it. But many a times when it says swing trade, it doesn't mean hold on to the thing forever. Swing trade means you're going to look at areas of resistance and you're going to be, keep an eye on it. So if this breaks 1983, there's some major resistance on the weekly at $21. You might want to consider taking profit. If this has a good day, if this moves up close to $21, you might want to take profit on there and then look for re-entry above $21, right? Sometimes you're going to give back more profit, and that's okay. You want to lock in your profit. But that's really how trading is. You're looking at the daily, looking for breakouts and breakdowns, and then you're looking at intraday charts with the same thing. Support and resistance, support and resistance. I can't say it enough. So NSM going on the watch list. I have it above 1984. I'll just keep it at that. That's fine. FARO, another one. The yearly high, 40.60. You'll see it kind of went there a while back. 40.45. You're seeing this whole area here, right across there. Put it above 40.60. And you'll see if I go to the weekly, again, you'll see this whole area here. Same thing with the 200 SMA. What is that? 41.45. So you'd be careful there as potential resistance. But what is that? So that's 41.60. So 40.60 to 41.60. That's $1. Again, a dollar move is huge. It might not happen Monday, but obviously you're not going to get into this position unless it breaks 40.60. That's again resistance. If it breaks 40.60, then obviously that's your critical area of support. If this breaks down, don't hold this thing because this thing can drop down to, this could easily give back half of that candlestick. So if it breaks 40.60, this could easily go down to $39 right over here. So that could be a huge loss. And if you're using options, that could be a huge loss. That's why you want to see candle closes. You want to see price breaking above. You want to see bidders coming in, sales coming in. You want to see it hold. And many of times, even if all of those parameters hold up, all it takes is one person to come in, make a sell order, and drop the price. There are still no guarantees, despite all of the rules that you set up. All right, so HDB. So this one right here, it did hold at its highs. You want to see it break this 98.85 area. I put 86, but be careful around $100. So basically $99 to $100. That's a potential dollar move. Careful, there's lots of resistance here. If you were to take an order on this, you might want to sell. If it closes, you might see a doji or something up here. You might want to close at the top of it, take your profit and then see it break $100 from there. It's all depending on what kind of risk you want to take. Some people might be like, it's dojing, I'll stay above because it's still above here. That's really, no one can tell you, what your preference is. It's a matter of what your preference is. But again, if it breaks this area, 98.8, 86, you see that there's clear resistance right there. If it breaks above there again, you can take re-entry or you can stay in and hold if it stays above here. Again, a matter of whatever you feel. But sometimes, a lot of times, it'll go up to this $100 and then you see this thing, boom, it shoots right back down and it can drop all the way back down to half of this green candle, if not down further. And then you could regret not taking your profits and actually then start to lose a ton of money. HUN. This is at its yearly highs. Yearly high is 2043. I moved it up to 2151 just to get over a $0.50 amount. If you go over to the weekly, you'll see it's above the weekly, it's above the daily, and on the monthly, it's literally above everything. So it's like literally at its own, pretty much its all-time highs. So this is one that you got to be careful with because, again, there's really no overhead resistance. It could continue to run or eventually it could give it back. So this is a very, very critical resistance area. So if you were to take this trade, you might want to sell when it gets to the top or wherever it's at because, again, it could easily reverse and come right back down, you know, at least down to this 28.72 area and even further. So if you do take a position like this, again, like I was saying to you, if it breaks above, I would probably take my profits at that point. And if it breaks below this, you're going to get the heck out of there because it can give a lot back. And then you just keep getting re-entry. If it forms, you know, another high, you can get in above that high potentially. It's just all depending what your what your preference is. CF, again, another one here, yearly high 37.17. You want to see it break above there. So again, you'd want to see price get up to 37, let's say 17 or 18. The bid coming up 37, 17, 18. Time and sales kicking in. Ideally, a tight bid-ask spread. You'd get in. If it breaks below this area, you'd get out. But you can see this is a potentially huge breakout on the daily. And if you look at the weekly, another one. Look at right across it. That's a huge cup. Potentially, like, this is gorgeous. This is an unbelievable potential breakout. And then that thing could run. You know, I mean, that has a good chance of going. If this breaks this level, that could go potentially up to $42. Again, you don't know. You got to watch the charts. So CF looks nice. ESNT, another one, kind of it's at its yearly highs. If you go to the weekly, it's at its weekly highs. And then monthly, it's at its monthly highs. This thing could just completely and totally break out. And if it does, I would probably take my profit. So if it breaks above that 41.72 level, again, that will become support now. So resistance now becomes support. I would probably take my profits at the peak. If you see it run intraday, you might want to get out and then look for a re-entry after taking your profits, but that's looking nice. CERN, another setup like that. Don't necessarily like this candle, but the bulls kind of came in and pushed it back up. 73.86 yearly high. If you go to the weekly, you'll see some 75.72. I can't see. Where is this? What's that candle there? Can't see. 75. I'd probably put it around $75. There's a kind of a candle wick right up there. But I mean, you know, again, keep an eye on it. And then if it broke above 75.72, you might want to get a re-entry. It could be another potential breakout. But there's some resistance. Keep an eye on it. But 73.86 up to potentially $75, you know, area. That's over $1 move. So it's kind of like what you're doing with day trading, just with higher end stocks. So if you're doing, you know, you're buying the actual stock, you could buy shares of it. If you're buying options, I would definitely sell them once you're getting the profit. If you're holding the actual stock, you might be able to stay in a little bit longer, but you got to be careful with just time value and all that stuff. Implied volatility could just whack you. SM, another one, really nice cup and handle. Cup followed by handle. Look at for this breakout area above 1936. If it breaks out above that, I mean, you have the 200 SMA at $21. Obviously, you got to be careful at $20. Is there a gap? Can't tell if there's a gap down, but look at that cup and handle, really beautiful. You know, 1942, $21 again. You know, dollar plus moves potentially. MTG, another one at the yearly highs. Look on the weekly, at the weekly highs. Monthly, still another one, kind of building up this base. This thing could break. I mean, this thing has some room to run, but, you know, if you're buying options and it pops, you might want to take your profit. If you're holding stock, you know, if you got in above this, I put $13 because it's the whole dollar amount. You know, if you buy stock, you can ride it until it breaks below 13 if you want. All a matter of what your profit targets are. CMC, same thing. Now this one has a doji. Don't necessarily like that, but if it breaks above that doji $21, that could have some room to potentially run using $21 as pretty much your stop if it breaks. NRG, another one, 26.25. You want to see it break that area, which would be yearly high. Pretty much an inverse head and shoulders. That's a really nice one. That could be a breakout. Keep an eye on that one. ENR, another one that didn't break out as much as I had wanted it to on Friday. Pretty much an ascending triangle or kind of a wedge. So I'd like to see it break above that 48. I don't even know what that is. 48. What is that? 48. I'm going to change it to 80. 48.80. See if that goes up from there. And obviously, you know, $50. Where is that? You know, put this area. You know, it's another potential dollar move that it can move. And then if it breaks above here, that 200 SMA, you know, it could be another more continuation. I hate when it does that. TGT. Another one. Just look at that. Just almost like an inverse head and shoulders kind of pattern. You'll see right here, it's in the gap right now. You'll see it's in the gap, which makes things volatile. So this is where you want to be careful. When you're already in the gap, create some volatility. See it break 61.60. If it breaks 61.60, it can go anywhere up, you know, 64.93. Obviously, be super careful using this area of resistance as support. If you're buying, you know, options, this could get crazy volatile. But if you're buying stock, look, it's clear pattern, inverse head and shoulders. You want to see it break here. It's into the gap. Now, again, this is still part of the base of the inverse head and shoulders. If it even breaks above that, you can watch here about 67. Look at this. And there's more gaps up. Boom. There's so many areas of resistance where this thing could, you know, get smacked and fall, or it can fly at some point. But it's just clear-cut patterns. AMX. This one rejected right at the, I think that's the 50 SMA. Right at that 1826. If it breaks above there, you know, you can see some resistance in these areas here. That's where you determine whether you want to take your profits or if you're staying in using this as a stop. It's definitely one to keep an eye on. PSTG, it's close to the yearly highs. It rejected. See if it falls back down or if it breaks above 1635. If it does, that's a potential breakout. On the weekly, 1603. I mean, it's got some room to run. It's got a kind of almost forming a flat top. There's, you know, it's got some really good run to run. Call it almost an inverse head and shoulders. This is a weird looking one, but you can almost call it a left shoulder, a head, right shoulder, followed by a break. Again, not all patterns are perfect. HSC, that's another one. At the yearly highs, kind of pulled back. If it breaks above that 21.75 marker, where is that? Is that above 70? Let me put it at like 21.80. 21.80. Gotta watch it. It's not perfect. But if that goes and breaks, then you look at the weekly, and you can see on the weekly, oh, that's why I put it at 21.82. It's because of the weekly. So that's where I want to keep it at. I'll put it at 21.81. That's why I did it. Was because of this. Look at on the weekly, you can see this is a huge, whatever you want to call this, a cup, inverse head and shoulder-ish. But a huge, massive base. If this breaks 21.81, that's a huge breakout. Let's see on the monthly. Yeah, I mean, then you have, you know, up to $25. This could be a nice run. Inverse head and shoulders almost on a monthly. Moving average is crossing. This could be really awesome to watch. So if it breaks, that could be a big deal. No question or as to why it's starting to reject or at that level, just to see, because obviously traders are watching it. GSK, another one, kind of like this wedge or ascending triangle forming. You want to see it break above this 41.12. You want to also be careful of this 41.23 area, which is the 200 SMA. I'd probably like to see it get above that. That's where I am going to change the alert. And I'm going to change and remove this. I'm going to put it right here to be safer for you guys because there's some resistance there. And I'm going to put the alert there as well. And so if it breaks above there, then it can go, 41.23 up to the gap here, 41.50, 41.80. I don't love this one as much. There's definitely some overhead resistance. So pattern looks good, but you want to see it. It's not as much room there, so got to be careful with that one. ISBC. I'm actually just going to remove this one. I don't love it. So that's the watch list. Again, longer videos, but guys, we're giving you watch list videos. We're giving you swing trades, showing you support and resistance, kind of showing you the bigger picture. So let me go back over here. Again, just going over, I do this at the end of every watch list. Take a few minutes, especially if you're new to our community. We call our group Stock Market Community. That's where you want to post all your questions and interact. That's where the community is. That's why we call it community. We are the Bullish Bears. That's our company. That's our name. That's what we are on social media everywhere. We just differentiate the group name over our fan page. But make sure that you like and follow our fan page on Facebook, the Bullish Bears. We post a lot of our updates over there. That's where you can see our messages more directly. And that's Dan just posted a new photo. That's funny. But every morning before 9 a.m., we post. Where is it here? Trade ideas, pre-market movers. You can see the scan. So again, the day trading watch list for Monday is not the greatest right now. It would make sense even going into the weekend, so that kind of makes sense. But come Monday, you got to watch the watch list trade ideas and do the same exact thing that I'm showing you on these watch lists here. Look at pre-market highs compared to daily breakouts and just mark your areas of support and resistance, just like I've been showing you guys. But again, it's very important to have your own scanner. Use our pre-market watch list, but hey, sometimes the best plays are coming off the scanner, not off our nightly watch list or trade ideas. So when you can afford it, definitely pick up trade ideas. We'd appreciate it if you click on our affiliate link, use our promo code BullishBears15, get 15% off. It helps us to grow as a community. Benzinga, it's one of the best news companies that's out there. They get news when it hits the wire, and again, getting news when it hits the wire catches it before it hits trade ideas. So if you have Benzinga news and you get breaking news on, let's say one of these companies, CAT, if you got your position, you've seen CAT, has some news. If you go and check the charts and you see, oh, the charts look good, you can get your position, let's say in CAT, or any company, I'm just using that as an example, before all the traders, if you catch in on it early, then other traders are seeing this. They're using tools like Benzinga. They're getting news. The more the news starts to hit, traders start to come in. They get their positions, which does what? It creates volume. When it creates volume, what does that mean? It hits the scanners showing volume. So that's why Benzinga and trade ideas are huge complements to each other. You get the news, you get your position. You're getting your position, creates volume, attracts other traders. Other traders come in, attracts more volume, hits the scanners. Obviously, brings more volume in. You look at areas of resistance, you take your profit, or determine whether you're going to stay in your position. That's really how it works. That's how the market works. Again, we have Benzinga, 25% community discount. Just go to benzinga.com, enter in Bullish Bears 25. Again, these are both a little bit pricey. They're around $100 a month or so each, but again, get them when you can afford them, but you're going to need tools to become a successful trader. That's really no other way around it. We try to do our best to help you out as much as we can and give you tools, but in the end, at some point, you got to pick them up yourself. We want to, again, help you as best as we can, but we're all about empowering you guys to become your own trader, to become a good trader yourself, and we provide the community and the support on the back end to help you. And just going again over to what we're talking about here, if you've been watching my watch list videos lately, there's so many different companies out there and leaders and all that stuff and gurus that are trying to sell you alert services, trade alerts. Get our service, pay $150, pay $100 a month, get our trade alerts. We're going to tell you when to get in and out of a position. And it sounds great. Tim, Dan, and myself, we did it. We joined several of them when we first got started. And then you realize over time, you're like, what a waste of money, because it's actually hurting you as a trader. And most newbies don't realize this. They're like, oh, it's great. Like, hey, I work, I really can't keep track of things myself. So when somebody tells me when to get in and out of a trade, that's very convenient. Well, yes, it's very convenient, but it's also very detrimental because you're relying upon a guru or a leader or a company to tell you when to get in and out of a trade, which is absolutely detrimental to your success as a trader, because that you're always chasing that guru to get in, and you're always chasing that guru or company to get out, and you're also chasing their followers. So think about it. If Tim, Dan, and I got in a position right now in whatever, just ABC company, right? And then we call out the trade. So that means Tim, Dan, and I, we have our position. Then we call out a trade to our followers. I mean, we have 16,000 followers in our Facebook group. We have over, close to 600 in our trade room. So let's just say we called out the trade in our trade room to 600 people. And a couple hundred of you guys get into that trade after us. What's that doing? It's bringing a couple hundred other people of volume buying that stock, which is going to hit the scanners, showing more volume. It's going to attract more people. And then what are we going to do? You guys are now all reliant upon us to tell you when to get out. So what are we going to do? We're not going to tell you to get out before us, right? So Tim, Dan, and I are going to take our profit first, and then we're going to tell you to get out of the position. And what are you guys all going to do? You're going to scramble to get out of that position. So you're chasing us in, and you're chasing us out. That's a terrible way to trade. And what happens if you miss the alert? What if you're at the bathroom at work? What if you're on a lunch break? What if you got called into a meeting, and we're telling you to get out of a trade, and you're stuck, right? It's a terrible, terrible way to do things. It's the way the industry is. It's attractive. It's sexy. And these companies make a ton of money. They're not doing anything wrong. There's nothing wrong with that model. That's how the model works, but it will be detrimental to your success as a trader. That's why Tim, Dan, and myself, we're trying to create this community, the support. We're giving you all of the tools that we possibly can to help you to succeed. We're actually giving you alerts, both day trades and swing trade alerts. You can implement them into your own brokerage account, and you decide. We're empowering you as to when you're getting in or out of your trades. That is the best way to succeed as a trader. And if you don't like that, if it seems too hard, if it seems like a lot of work, well, it is. It is a lot of work. Trading is hard. It is not easy, and there's no we don't want to give you an easy path to success because there isn't one. Again, we try to tell you guys it's in our best interest. It would be in our best interest. We have a huge following, one of the biggest on Facebook right now. We have an incredible brand that's growing worldwide right now. It'd be in our best interest right now for Tim, Dan, and I to be like, hey guys, we're giving out all these trade alerts. We have a trade room. We have a huge, massive following. We don't have to charge for advertising. We have 50 to 100 people joining a day for free on Facebook. We could easily charge $150 a month and become super rich doing this, but that's not what we're trying to do. We want to help you guys. We're trying to build a movement, a mission, a community, and ideally what we're trying to do is help you to become good traders and give you that community for support to try to create this kind of bigger movement for you guys. But in order for us to be able to do that, again, we say this in every video, we do survive on donations. Many people will be like, well, listen, it doesn't cost, what does it cost to run a website? Or what does it cost for, you guys are traders, why do you need money? Well, it's just like with any type of business or it's the way that's the way the world works, right? You're paying for people's time, what they're giving in. You know, this video right here, it's an hour long. It's going to take me 45 minutes to upload and produce it. It's jam-packed full of content, giving you trade alerts, telling you exactly what to look for, ins and outs, all of this. So at the end of the day, you're paying for the time, you're paying for the energy, we're giving you all of these things and empowering you. And in the end, we're giving it to you all for free. And in return, all we're saying to you guys is, listen, you know, Tim, Dan, and I, we have expenses and families and everything like everybody else. Money split 3 ways doesn't go very far. And if you think people donate, and a ton of them do, again, like we try to tell you guys, not as many people donate as you think, which is okay. But, you know, in order for us to stay non-membership based, we need everybody to donate at least a little bit. We have a donation button, just like you'd see again, how this model works and what we're trying out. Is this what you see on a lot of social media, YouTubers? You're seeing YouTubers all over the planet. You like your favorite YouTuber. What are they doing at the end of every video? They're asking for you to donate. Why? Is it because they're greedy? No, it's because they're trying to make a living like everybody else. They're just trying to do it a different way. You know, we have a donation tab over here. And if you're on a budget, if you're like, you know, we have other people say, a lot of people say, well, listen, hey, when I make money in the stock market, we'd love to give back. And we say, great, we appreciate that. But in the meantime, since we're not charging you, we have, you know, monthly options for as low as $10 a month, as low as $25 a month. That's a cost of 1 to 2 trades a month. So when you're learning, if you'd like to give back to us, we're not asking for a ton of money, 10, 25 bucks a month. You know, buy some merchandise from us. We don't get rich off merchandise. You make a couple bucks, a few bucks here, there, but it helps us, right? It helps us to continue to grow. If you buy trade ideas or Benzinga from us with our links and our codes, it helps us. It helps us to continue to grow. So that, again, we're trying to tell you, we try to be as transparent as possible. Tim, Dan, and I, we do not want to charge membership fees. We put so much time and energy into all of this that we'd like to see this mission grow and be accomplished with what we're looking to do. At the end of the day, if we started charging membership fees now, we'd make a ton of money, but in the end, we're not accomplishing what we ideally want to do for you guys, is to create that whole big community, this big movement. So we're sacrificing a ton of money, and in return, we're just asking for your support, just a little bit here and there, donate, buy some merchandise from us, just to keep things going. So again, we appreciate your donations. If you need more training, we have free courses. Again, a couple $1,000s worth of free courses. Make sure that you subscribe to our daily watch list over here. This is where we send our trade alerts and our watch list. Follow us on social media over here. Here's our Twitter here. You can make sure you follow us over here, over on Bullish Bears. You know, we post, sometimes it's easier to follow us on Twitter and stuff like that, because you can, you know, we're on our fan page, because again, we have a huge growing community. Sometimes it's tough to see a lot of our updates. And last but not least, because I'm losing my voice here, is make sure you subscribe to us on YouTube, click the notification bell, watch our videos, like them, share them, comment on them. We're very interactive. Again, so sorry that this video is so long, but we're jamming them packed with content to, again, help you guys as best we can, to help you guys to become better traders. So until next time, happy trading, enjoy your weekend, and see you on Monday. Enjoy.